please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Just about half a minute for getting the pre-opening rates. Let's welcome Deven Choksey, who is back with us after quite a bit, a bit of a gap, isn't it, Deven? Distance always makes trends a little more clear. What is the sense you're getting with the market repeatedly getting bogged down at that 10,500 mark? Are you getting a sense that it's going to be difficult to make further gains till you get something really solid in the form of earnings?
Yeah, good morning, Lata. Well, I think the market is basically driven on two factors, as I always believe. One is, of course, the earnings and the fundamentals, and the second is liquidity. Both these particular areas have been, I think, quite positive, I think, for the markets in general. And if we are likely to see the Q3 earnings season, which is going to validate the argument on the earnings, which is likely to be, I think, extremely positive. We already started seeing some clear numbers, I think, as far as I think the autos are concerned, and that's where I think one could possibly argue that you would see even the other industries showing relatively better performance in the third quarter. The liquidity factor, I think, though little bit hampered in last couple of months, I believe that would probably come back, and selectively the market would have the clear liquidity coming back into the systems. As I see it, I think the index levels, their market is likely to remain in a range, but individual stock specific actions, I think you would find market remaining quite positive. So I think stay tuned with individual stocks vis-a-vis the index in general. Okay, the early trades are coming in on the markets and they're looking very good. The Nifty is opening about 0.5% higher. The Sensex is not doing as much, so I guess at some point the correction will come. I mean, I was assuming that there will be some selling in the fuel stocks, HP, BP. At the moment, I'm not seeing too much of a red tick. Reliance is the one that's standing tall. After all, they've announced an expansion yesterday. That's up about 1.2. ONGC. So the beneficiaries of the commodity cycle turning in favor are the ones that are doing very well. But actually, BP is also in the green. So I don't know, I guess some correction will come. We're also seeing some green on M&M, Indiabulls Housing, L&T. L&T, after that interview yesterday with Shankara Raman, certainly took to the wings. Yes. And we saw a 2% uptick. But let's see, we should allow the market to settle down because there is still a wide gap between the Sensex and the Nifty. So let's perhaps bide our time and get to more experts.
Yes, just a few stocks I want to mention. Nitesh Estates we were talking about. I must remind our viewers that it's just a 17 rupee stock. So the rise is looking phenomenal, 20% rise there. But nevertheless, a lot of reports about funds buying into the company, etc. SJVN, they have a board meet on the 8th of Jan to consider a buyback. So SJVN in pre-opening has surged significantly, up about 20-odd%. And Bank of Maharashtra, 650 crore fundraising by way of a preferential allotment. Bank of Maharashtra is also moving with strength. But Deven, good morning and Happy New Year to you. You said individual stocks is what you're going to be looking at. What are your thoughts on Ashok Leyland? We got some positive commentary from the management. Is it a fresh buy even at these 120 levels?
Sonia, good morning and Happy New Year to you as well. I would think so. The commercial vehicle space, I think, looks really interesting, and from a long-term perspective also, I think this particular space has turned around as I see it. On one side, we are seeing the higher amount of industrial activities picking up, mining activities picking up, infrastructure activities picking up, which is resulting in better demand for the commercial vehicles per se. And both Tata Motors as well as Ashok Leyland, I think, have shown a distinct improvement in the numbers in the December ended month. We believe that this is beginning of this particular trend, wherein the commercial vehicle segment would start showing distinctly better performance. Maybe I think in a couple of quarters you might also see the typical discount factor that I think we have seen in the particularly HCVs. I think that will go away. So I think we remain positive on the commercial vehicle space. Though the stock price may have little moved up, I think, at this point of time, but in any correction, it would be a buy opportunity into the commercial vehicles.
Okay. Well, the markets indices are persisting with about 4.4% in terms of gains. So clearly it looks like a good start, and now Bharti Infratel also has moved among the gainers. We'll have to wait and see how things pan out. The JP group of stocks are doing well in the mid-cap space. This is a story we've been chasing and reporting from the word go. The Reserve Bank is not insisting that you take JP Associates to the NCLT, although they were in that second list. That's simply because there's a Supreme Court hearing on JP Infratech and they want that to get over. The hope of the bankers is by the time that happens in end January, the resolution of JP Associates would anyway be through, and so it may not be necessary to take it to NCLT after all. This has been the position of the bankers, and since the RBI is not insisting that you take the company to NCLT till the Supreme Court hearing is over, the stocks appear to be getting a little bit of strength from that hope that even the resolution will happen outside NCLT. Let's get Chandan Taparia of Motilal Oswal to the conversation. Good morning, Chandan. What are you trading today?
Yeah, very good morning. Broader indices are quite choppy and moving in a range, but selective stocks are likely to do well. We have first traded on Bata India. The stock has seen open interest addition of around 18 to 19%. It formed a bullish candle and jump in the delivery volume is also visible. Formed a positive price pattern, surpassed immediate hurdle of 763. So recommending to buy with a stop loss of 760 and looking for an upside target towards 796-800 zone. Second trade is from the IT tech. KPIT was recommended last week, did well. Now we are betting on the Hexaware. This stock is at the verge of the fresh breakout and the fresh momentum. So expecting the stock to rally towards 364, one can buy with a stop loss of 343. It also added open interest near to 8 to 9%. So clearly indicates that longs are even adding at the higher level. Last trade is on Jubilant Food. After a long consolidation, it has formed a triangle pattern given the breakout of the same. Longs are adding, volume breakout also visible. So one can buy for an upside target towards 1925 and putting the stop loss of 1810 is advisable on the counter. Those who are interested for the option can look at the metal counter. I'll select Tata Steel where I'm looking positive to range bound. So recommending to be with coal ladder spread, buy 740 coal, sell one lot of 760 and 780 coal. Risk is only 1.7 rupees, and if moves higher, we'll get profit of around 10,000 rupees, 7,000 to 10,000 in the strategy.
All right, thank you very much, Chandan, for that. No, I interrupted you because I wanted to add that the bond yields have risen a little. They closed yesterday at 7.32. These days they move in wide ranges, and today it's opening at 7.36. Clearly, it's the crude impact. As well, the rupee opened slightly weaker, about 6 paise more expensive dollar, given the strength in the dollar globally.
Okay, so that's the update on the money markets, but let's get back to the equity markets because at this point the rates have settled slightly higher. Of course, we're still facing a hurdle at the 10,500 mark on the Nifty, but nevertheless, looks like the start could be in the green. Deven, the other stock I wanted to ask you about was L&T. Because, you know, as Lata was pointing out, the management was extremely positive yesterday, talking about more order wins, etc. And L&T is now inching back towards that 1,300 mark. Is it a good idea to buy here?
Yeah, Sonia, I think the capital goods equipment suppliers, I think particularly are having good time now. We are seeing the larger amount of order book coming into the cap goods companies, largely from the government's government spending on the public projects. So particularly I think the infrastructure projects in which I think most of these companies are operating, including L&T, I think they are beneficiary to it. In fact, one of the very significant area where I am seeing the larger amount of order inflow coming in is in the area of transmission and distribution segment in the electrical business. And some of the capital goods players are actually I think having good time with the new order book. Whatever they haven't seen in last 10 years, I think they are likely to see as far as I think the order book is concerned in next 3 to 6 months. So that's where I think you could probably argue that I think some of these companies are likely to see better times going forward. Of course, execution and the result impact I think would take time in the earnings of the company. But the order book position, as you mentioned, in case of even L&T also, they started improving, and that's where I think there is a reason to remain confident about the entire space in general and select companies in particular.
Okay, just coming back to you, we have seen this crude price having its impact on the bond market for sure. The bond yields are about 4 basis points higher than yesterday. So let's get an expert in. A. Prasanna, the Chief Economist at ICICI Securities Primary Dealer Unit, joins us on the phone line. Prasanna, crude moving towards 68, is it changing things a bit? Will it be even worse for bonds? What's the range?
We still, I think the market is still seeing it as a temporary move. Of course, some of it is related to the ongoing problems in Iran, so we don't know for sure whether this move will sustain. But you have to remember, anyway, market is grappling with extra borrowing and uncertainty about the fiscal metrics. So obviously, there's one more negative to be added. But I would say still the bigger driver for the market is what is going to be next year's fiscal deficit and the borrowing numbers. So all the other negatives are at this point of time subsumed in that larger question.
Okay, well, a two-part question. There were some economists noting that the small savings collections are lower this time. How do you expect that to impact, borrowing and therefore bond yield? And secondly, the new 10-year is going to get auctioned. So can you give us a range for both the old and the new for the month of January?
Small savings collections, we don't think is going to be lower than what has been budgeted. Budgeted amount is around rupees 1 trillion. We think the actual collections will perhaps slightly exceed that number. So we are not worried about it. I think the comparisons are a bit lopsided because last year after demonetization, the collections picked up. Whereas this year, I think from April itself, the collections have been quite healthy. So maybe the YOY comparisons have been lopsided in both the halves of this year. As far as the range for the new 10-year, I think the new 10-year should settle around 7 quarter in this month. And the old 10-year would be around 15 to 20 basis points higher than that.
Okay. Well, finally, how would you enter the budget with, what would be the, would the market enter the budget light, assuming that there could be, some bit of fiscal slippage?
Bond market is always known for being optimistic in India. That's not how bond markets are supposed to function, but we are different. So I would assume that there will be a segment of the market which will still believe that the fiscal deficit will be lower than or closer to around 3.2 or 3.3%. Our own initial calculations show that it will be around 3.5%. So, of course, we have to firm up the numbers. So we do think, there is a chance that the market again goes into the budget a little bit heavier and budget turning out to be negative.
Okay. 3.5%. Not too many people in the market believe that it could get to that level, but thanks for that caution anyway. Prasanna, thanks for joining us. The market for now is looking okay. Ashwini, a lot of these, consumption-oriented stocks, domestic stocks are looking good. M&M, L&T, Asian Paints, etc. What would you pick as your 9-10 call?
Well, 9-10, first of all, the way rates have settled, they don't give much hope of a breakout today. So you will open higher and probably by end of the day lose those gains. I think I would go short on BEML. That's a sell with a stop of 1540, target of 1485. And let's see as the markets open where we can go long.
But are there enough positives in the market to keep the mid caps in the green, Ashwini?
Well, positives to the extent that the market is not breaking down.
Okay.
So whenever the markets have that confidence, mid caps start to have their own rallies. But otherwise, this mid cap rally doesn't mean a whole lot.
Okay. Well, Deven, just to come back to you, we still have about 2 minutes for the markets to open. How would you approach the market pre-budget? What would you be long on?
Yeah, Lata, this month is a month of earnings, and probably I think the market generally have a tendency that during the earnings season, I think it remains on a wait and watch mode. So I think and budget is coming up on 1st February. So obviously I think budget related expectations would keep driving the markets on either side. But the fact remains that I think one will have to remain really selective as far as I think the market activity goes. Okay. I would probably prefer to stay more focused on individual stocks vis-a-vis the index in general, because index in general, as I see it, I think is likely to move in a range of a little narrow range of 10,250 to 10,750 at this point of time. Unless it breaks above or below this level, I think it is going to be a tighter range. Otherwise, individual stock-specific action would be more meaningful during this particular month. So, I think we would stay focus on some of the auto names, some of the other names as well.
Okay, you said auto, so I'm going to ask Sudarshan his view on Tata Motors because that's the big loser this morning. Sudarshan, how would you trade that one?
Oh, I would be short in it. It's been a big loser throughout. The charts are messy. 1 up day and 5 down days. It's a bearish chart.
Okay. Well, Mitesh, anything on your plate before we hear the opening bell going?
Lata, I think the fertilizer stocks in the mid-cap segment could continue the rally. I think yesterday we had good moves happening over there, and we talked about Chambal and RCF. I think other stocks also joined hands. I think that's where focus should be, at least if you're trading for a 2-3 day kind of perspective.
Okay. Bajaj Electricals, I think, was Ashwini's call, was it? There was someone with a Bajaj Electricals call. That stock